Hello and welcome to AI Market News by LM. So, the big question on everyone's mind today is this. Is the Federal Reserve about to completely rip up its playbook? Because Fed Chair nominee Kevin Warsh just dropped a huge hint about ending the dot plot. And that's a move that could send some serious shockwaves through the markets.
Right now, we're seeing two massive forces just colliding. On one hand, you've got a geopolitical crisis that's putting a chokehold on global oil supplies. And on the other, a potential revolution brewing at the world's most powerful central bank. It's a heck of a mix.
So here's our game plan for breaking this all down. We're going to start with the geopolitical tensions that are setting the stage. Then, we'll dive right into Warsh's really dramatic hearing, and we'll dissect what the end of forward guidance could actually mean. After that, we'll see how the markets are handling all this. And finally, we'll take a peek at the calendar for the week ahead.
Okay, first things first, let's set the global stage. For weeks now, the ongoing tensions between the US and Iran have had traders basically walking on eggshells, and it feels like it's all coming to a head.
Now, while the US did extend its ceasefire, which is good news because it avoids an immediate blowup, the peace talks have totally stalled out. And the really critical part, the Strait of Hormuz is still effectively blockaded. Iran's foreign minister is even calling the US naval presence an act of war. So we're stuck in this really tense standoff with no clear way out. And you can really see the economic fallout right here. Brent crude prices have been all over the place, surging back toward that really important $100 per barrel mark. Look, as long as that vital waterway is clogged up, you can bet the world's oil traders are going to be nervous and energy prices are going to reflect that risk.
Okay, so just as that geopolitical pot was starting to boil over, another shockwave hit the markets this week. This one came straight out of Washington during the Senate confirmation hearing for the next potential Fed chair, Kevin Warsh.
The whole hearing, pretty much all of it, came down to one central question. Could Kevin Warsh actually keep the Fed independent, especially with a president who has been very, very vocal about wanting lower interest rates?
And the questioning got super direct. Warsh was asked point blank if he was going to be the president's human sock puppet. His answer, a quick, firm, absolutely not. He really tried to drive home that he'd be his own man if he gets the job.
But honestly, the real bombshell, the thing that has Wall Street buzzing, was the clear signal he sent that a radical shift is coming in how the Fed even talks to the markets. For years, markets have been hooked on this thing called forward guidance. Traders have leaned heavily on tools like the Fed's dot plot, that chart that basically shows where all the policymakers see interest rates going, to try and guess future moves and manage their expectations. But Warsh, he made it pretty clear he is not a fan of this whole system. He signaled that he wants to dial it back, or maybe even get rid of the dot plots completely. This would be a massive change in how the Fed operates, basically unwinding a policy that's been around for decades.
So what does this actually mean? Well, it means we could be shifting from a world of managed expectations to one with way more volatility. The old Fed playbook gave us a certain amount of predictability. A new Fed without any dots, well, that means every decision is a total mystery until it's announced. That could make every single FOMC meeting a huge market-moving event. So, after getting hit with this 1-2 punch of geopolitical risk from Iran and potential policy chaos from the Fed, how did the markets react?
Well, over in the currency markets, the dollar has stayed pretty strong against the yen. We're seeing the dollar-yen pair just hovering below that critical 160 level, and that's a real line in the sand that has officials in Tokyo on high alert for potential intervention.
Meanwhile, US stock markets ended the day deep in the red. The Dow, the S&P 500, and the NASDAQ all closed down by around 0.6% as investors just tried to make sense of these twin uncertainties that are weighing on everything.
And this chart right here really just captures the overall mood perfectly. The CNN Fear and Greed Index, which is a great gauge of investor sentiment, has swung decisively into the fear zone. It tells us that right now, caution is the name of the game. So with all of this swirling around, let's take a look at the economic calendar and see what might be driving the conversation next. Okay, based on the info from investing.com, there are a few key events we need to be watching. On April 22nd, we've got crude oil inventories, which is going to be huge given the Hormuz situation. And we should definitely pay close attention to the UK inflation data on the 23rd, because that could give us the first real signs of the inflationary impact from the Iran conflict. So we're left with this one final big question. As we try to navigate this new landscape, with a less predictable Fed and all this lingering geopolitical risk, it kind of feels like the only thing we can really guarantee is a lot more volatility ahead.
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.